welcome to episode 24 of Takeaways. My name is Patrick Searcy. I'm Director of Marketing for ALN Apartment Data, and I'm joined by the star of the show, Senior Market Analyst Jordan Brooks. Jordan, how are you today?
I'm great, Patrick. How are you?
I'm doing well. It's super hot here in Texas. I imagine it's still the same there in Florida.
Yeah, it's pretty similar out here. We're getting lots of sunshine.
All right. Well, we're talking about the July newsletter article, which was our mid-year multifamily review. Well, the first section of the article mentions a fairly typical new supply volume and an unusually low demand in the first half of the year. But also that average occupancy closed June higher than in any June of the last 5 years. And, those two things seem maybe counterintuitive. How do we square those dynamics?
Well, as you said, a little bit counterintuitive on the surface, just because you might think, okay, well, if new supply is sort of at a typical level, apartment demand is down considerably, we'll probably see, some softness on the average occupancy side. So just to kind of put some numbers to that sort of general dynamic for those that haven't seen the newsletter yet, new supply through the first half of the year was about 170,000 units, which is a little bit down from 2021, but kind of right in the typical range over the last 5 years or so for the first 6 months of a year. And then net absorption was down about 75% nationally, less than 90,000 net units absorbed through June. So really the reason that average occupancy is still kind of unusually high for this point of the year, even given that dynamic, is just that we came into the year with average occupancy already so high from last year's run up with over 600,000 net absorbed units last year. So we started the year over 94% for national average occupancy, whereas typically that's closer to 92%. And so we have seen some retraction in average occupancy so far this year. We've seen about a 1% drop, whereas normally we would see, a slight uptick in occupancy in the first half of the year, maybe a 0.5% gain, something like that. But when we came into the year at 94% rather than 92% occupancy, even with that 1% loss, we're still unusually high. And then that's kind of playing out across the rent growth numbers still.
We're still seeing a decline in lease concessions so far this first half of the year. Is that something you think that would maybe change throughout the rest of 2022?
It's certainly possible. We're now looking at 7 or 8 months in a row of kind of muted net absorption. And as I said, even though we had that cushion built up in average occupancy, that cushion has been winnowed in that period and kind of continues to be winnowed. So as we move through the summer and into the fall without some kind of major rebound in demand, we're then going to be in a situation as an industry where we still have the tepid apartment demand, but now average occupancy is back down to a more typical 92, 93%, something like that. And so that will probably take some of the wind out of the sails of rent growth, and what that will look like initially probably will be sort of the reemergence of lease concessions. And we track at ALN both the availability of concessions as well as the average concession value. Both of those have trended down really since kind of the peak of the pandemic era. We haven't seen a turnaround yet, even so far this year, but that is something in the back half of the year that we could probably look for and say that's probably something that we're going to start seeing.
In the market note section, you mentioned a handful of markets specifically, sort of the good and bad ends of the spectrum here for absorption and rent growth. Were there any other broader takeaways there beyond those specific markets?
Well, one interesting thing that kind of popped out of the data was for markets that began the COVID recovery earlier, the year so far this year has, generally speaking, been a little bit more of a challenge than for some of the markets that were kind of later to the recovery party post-pandemic. So, as mentioned in the newsletter, areas like the California Bay Area, Chicago, Washington, D.C., these markets are at the top of the list this year so far for net absorbed units. Whereas, in 2020 and 2021, those markets were among the most affected in the early days of COVID, and then were slower to sort of come out of that. And then on the other hand, you have markets like Phoenix, Atlanta, the California Inland Empire, which actually has done pretty well over the last couple of years. San Antonio in Texas. All of these markets have sort of suffered a net loss of rented units so far this year. So they find themselves on the other side of the coin, despite the fact that in the back half of 2020 and in 2021, they were areas that performed quite well. So we've seen a little bit of a dichotomy there, where sort of the markets later to the pandemic recovery party seem to be faring a little bit better so far this year.
What can we look forward to from you for the second half of the year? Are you just as busy as the first?
Well, I'm still enjoying a little bit of a summer slowdown in travel, with all the delays and flight cancellations. I feel pretty fortunate about that. So in terms of speaking events, I think my next one is not until early September, and that'll be in Connecticut for the Connecticut Apartment Association trade show and conference. In the meantime, sort of for the rest of July and August, to be on the lookout on the blog, alndata.com/blog. We'll be putting some great content up there. And then I know that our intrepid sales team is probably traversing the country as we speak.
We do. We have quite a few trade shows coming up. I believe our next one is going to be in Nashville on July 28th, I believe. And yeah, that really kicks off the second part of the year's, the second season of the year for trade shows. So it's definitely going to be very busy. You want to keep track of where Team ALN is. We post a lot about where we're going and what we're doing, where you can see us on our social media. You can keep an eye out for that on Twitter. It's ALN APT Data, or you can just search for ALN Apartment Data on Facebook or LinkedIn. And other than that, Jordan, enjoy a little bit more downtime before I'm sure it gets crazy again. And we'll talk to you next month for the next episode of Takeaways, starting season 3, I guess. We're going into our third year of this. So thanks again, Jordan, for your time. And I'll see you next month.
See you then, Patrick. Bye.